This is StatuteGuard, a vendor-neutral verification layer for AI-drafted tax positions. It does not prepare returns, and it does not replace a compliance platform. A position from any tool is proven against the encoded statute, returning a hard pass, block, or needs review. The tax preparation problem is being solved. The verification problem is not. When an AI misclassifies a deduction, the 20% accuracy penalty under Section 6662 lands on the human who signed the return, not the algorithm that drafted it. And a language model cannot be trusted to police a language model through the same weights that produce the error. Before proving any position, look at what StatuteGuard actually knows. The statute itself is encoded as a typed knowledge graph. Provisions are the nodes. The arrows carry the legal relationship between them, exception, cap, placement, below the line. Select any node to read the statute it encodes. In production, this is a Neo4j graph. Here it runs locally. And every verdict comes only from rules a tax team can read. Each provision is a decision table, mapping a condition to a verdict and its statutory basis. Underneath is the real, executable OBBBA Rego source, so the policy can be confirmed against the statute, line by line. This is what a language model can never give, a rule you can audit. Now take an AI-drafted position and prove it against that encoded statute. The consensus error, the new OBBBA car loan interest deduction, drafted as an above-the-line deduction that reduces adjusted gross income. Select it and verify. Blocked. Do not file as written. The drafted statement conflicts with the encoded statute. The pipeline ran in stages on the right, each annotated with its measured execution time. The language model only proposes, the deterministic engine decides. The first stage is the only place the language model acts. A live model reads the memo into a checkable claim and reports its confidence against a floor. Below that floor, the position is escalated to a human rather than resolved by the model. Agent advises, code decides. The second stage is deterministic. The rule maps the claim to a verdict and names the failing condition. Here, the classification is above the line and it affects adjusted gross income, which the statute forbids. One conflicting citation is enough to hold the entire filing at do not file. The verdict is grounded in the real statute. The engine traverses the Internal Revenue Code graph and lays out the citation chain from Section 163H1 through the Qualified Personal Vehicle Loan Interest to Section 63B7. Select a node to read the statute it encodes. Because this position is blocked, the layer also shows what would go wrong downstream if it were filed as drafted. A single misclassification cascades 5 ways. Adjusted gross income, the state income tax coupled to it, the Medicare IRMA surcharge, the medical expense deduction floor, and student loan income-driven repayment. Every verification ends in a filable record. The audit stage produces a tamper-evident due diligence certificate under Section 6662 with a verdict, the provision, a policy hash, and a local timestamp. Open the printable record. The record can be printed, saved, or exported as JSON, and it is evaluated entirely on device. Nothing about the position ever leaves the perimeter. The layer is not trigger-happy. A clean Section 1031 like-kind exchange, an investment building for another commercial property, verifies as a pass, cleared to file. On the labeled benchmark, gate precision is 100%, with 0 correct positions ever wrongly blocked. Honesty is the product. A Section 280 home office turns on a facts and circumstances test of exclusive use, which is outside deterministic coverage. Rather than bluff, the layer escalates it to a human reviewer. Needs review, not a confident guess. Another common drafting error. The Section 199, a qualified business income deduction, claimed to reduce adjusted gross income. It does not. It is taken below the line in computing taxable income. Blocked. The samples are only a convenience. A tax professional types any position directly from any platform. Here, a $92,000 electric SUV claiming the Section 30D Clean Vehicle Credit. Blocked. The manufacturer's price of $92,000 exceeds the $80,000 cap for that vehicle class under Section 30D. The same provision would pass on a compliant vehicle. The facts decide, and the rule is explicit about which one failed. None of this is anecdote. Run the benchmark across a labeled set of 42 real pre-classified positions. Deterministic coverage, 71.4%, resolved without escalation. Gate precision, 100% with 0 false blocks. Error catch and correct escalation, both 100%. These describe the layer's coverage and precision, and they hold at any model quality. And every position is auditable. Select any row to replay it through the same pipeline deterministically. Same input, same verdict, every run. That reproducibility is what makes the layer certifiable, where a language model judge is not. A vendor-neutral layer that proves each position against the statute, escalates the genuine gray areas instead of guessing, and writes a filable record for every decision. It is the verification layer that tax drafting is missing. From Veriprajna, building true intelligence. If a wrong tax position carries real cost, we would welcome a conversation.